Hi everybody, this is a lecture for week 12. This is still lecture 1 but part 2. In the previous lecture, I have explained about job order costing system. Costing system means the method that you can use to calculate product cost for a business. And then in this topic, you learn about job costing system. Job costing system is the method that you can use to calculate product cost for a business that produces several or many unique products in one accounting period, and the products are manufactured or produced after the business receive order from customer. Okay, so in the previous lecture, in the previous video, I have explained that to calculate cost for a job, the calculation is very easy or simple. The calculation is job cost equal to direct material cost plus direct labor cost plus overhead cost. You have seen the way to calculate direct material cost for a job, and then you have seen the way to calculate direct labor cost for a job. And now you will see the way to calculate overhead cost for a job. Okay, see here the learning objective is to compute overhead cost for a job or product. Okay, so I have told you earlier, if you want to calculate cost for a job, to calculate the direct material cost is easy because you can see the record in the material requisition form, and then you can calculate the total the direct material cost easily. To calculate the direct labor cost is also easy. You can check the time ticket and you can calculate the direct labor cost easily. But the problem is to calculate the overhead cost. Okay, when you want to calculate the overhead cost, the problem is the overhead cost of a business does not have a direct relationship with a single job. So that is the problem. So let's see how to calculate that. So when you want to calculate overhead cost for a job, you have to allocate the cost or to divide the cost in using a certain method. Okay, let's see. In this slide, you see the brown box. Manufacturing overhead is applied to jobs that are in process. An allocation base such as direct labor hours, direct labor dollars, or machine hours is used to assign manufacturing overhead to individual jobs. There is no direct way to divide overhead cost to many jobs because each job is unique. So you have to use allocation base. The examples mentioned in this slide is labor hours, direct labor dollar, or machine hours, or other allocation bases. But the process is not very difficult. The process is simple. Okay, these are the reasons why you have to use allocation base to divide the overhead cost to different jobs. First, it is impossible or difficult to trace overhead cost to a particular job. Second, manufacturing overhead consists of many different items, ranging from the grease used in machines to production managers' salaries. Number 3, many types of manufacturing overhead costs are fixed even though output fluctuates during the period, the accounting period. Okay, C. When you want to allocate or divide manufacturing overhead cost to different jobs, you have to use this calculation. This calculation is called predetermined overhead rate. The predetermined overhead rate used to apply overhead to jobs is determined before an accounting period is begin. Okay, see here the formula to calculate the predetermined overhead rate. Predetermined overhead rate or POHR equal to budgeted or estimated manufacturing overhead for one accounting period divided by budgeted or estimated allocation base for an accounting period. Okay, ideally, the allocation base is a cost driver. Cost driver is a factor that causes cost increases or decreases. The example that you have seen in the previous slide is direct labor hour or machine hour. If a business is a labor intensive business, most of the time labor hour is used as the allocation base. If a business is machine intensive business, then most of the time the allocation base used is the machine hour. Okay, why you have to use the POHR? The main reason why you use POHR is because you want to calculate the cost quickly. When a job is done or finished, you want to calculate the cost quickly because you want to know the cost, and manager want to think about the pricing or profit or loss, etc. So you have to calculate the cost very quickly. As a management accountant, you have to calculate it very quickly. If you want to use actual overhead cost, then you have to wait at the end of the month or at the end of the year to get the actual overhead number. So to make the calculation of cost quickly, you can use POHR and you can calculate the total cost for a job whenever the job is finished or done. Okay, this is the thing about determining predetermined overhead rate. Predetermined overhead rate are calculated using a 3-step process. Okay, this is easy actually to the main idea is to calculate the POHR. You have to prepare a budget. When you prepare a budget, then you have budgeted the number for budgeted overhead cost for an accounting period, and then you also can get the budgeted allocation base for an accounting period. So that is the main idea. And then after you have after a business has the predetermined overhead rate, the business can allocate overhead cost to different jobs, to many jobs. The calculation the calculation for overhead allocation or applied overhead is like this. You can see that in the yellow box. Applied overhead or allocated overhead equal to POHR, the one that you have seen the calculation before, times the actual activity or actual allocation base. If the allocation base is labor hour, then you times the actual labor hour. If the allocation base is machine hour, then you have to times the machine hour. The calculation is not very difficult. You can see the calculation in the example that I will show you after this. Okay, this is the calculation for POHR. POHR, remember the formula. The formula is budgeted or estimated overhead divided by budgeted or estimated allocation base. In this example, let's say the estimated overhead is 640,000 and the budgeted or estimated allocation base is 160,000 direct labor hours. Then the predetermined overhead rate is $4 per direct labor hour. So it means that for each direct labor hour work on a particular job, $4 of factory overhead will be applied to that job. or $4 of factory overhead or manufacturing overhead will be allocated to that job. Okay, this is the example of how to calculate total cost for a job. So remember the thing, this is the job cost sheet that you have seen in the previous slide. So direct material $116, you can trace that cost easily. Direct labor cost is $88. Also, you can trace that cost very easily. When you want to calculate the manufacturing overhead cost, you have to use predetermined overhead rate. To calculate the predetermined overhead rate, you have to have allocation base. In this sample scenario, the allocation base is the labor hour. So see here, the labor hour is 8. So the overhead rate is $4 per labor hour. So $4 times $8 hours. So the total overhead cost is $32. So you can see in the bottom of the job cost sheet, the cost summary is like that. Direct material cost is $116, direct labor cost is $88, and the manufacturing overhead cost is $32. And then the total cost is equal to $236. Total cost equal to direct material cost plus direct labor cost plus overhead cost. And then there is one item at the bottom of the document, unit product cost. So unit product cost, to calculate that, you see on top of the document in the right side, there is a column, there is a space for units completed. It means that for this job, there are 2 units product produced for this job. So 2 units product. So how to calculate the unit product cost? Total cost is $236. You divide with the 2 units. So unit product cost is equal to $118. Okay, this is the explanation about the unit cost. Okay, this is a sample question. This question, through this question, you will see how to calculate cost for a job. Very useful. This sample question is very useful. Okay, see, the question is like this. Job WR53 at this company, NW Fabrication maybe incorporated. For this job WR53, this job required $200 of direct material and 10 direct labor hours at $15 per hour. And then estimated total overhead for the year was $760,000 and estimated direct labor hours were 20,000. What will be recorded as the cost of job WR53? Okay, this question gives you data about direct material cost, direct labor cost, and then several data about or related to overhead costs. And then the question asks you to calculate the cost for that job WR53. Okay, how to answer this question? You have to calculate cost for a job. So remember this. I tell you again. Cost for a job equal to direct material cost plus direct labor cost plus overhead cost. So to answer this question, you have to do this. See this? Like I said earlier, cost for a job is direct material cost plus direct labor cost plus overhead cost. See, direct material first. Direct material is very clear. In the like a small box at the bottom of this slide, you can see the direct material is $200. By referring to the question, you can see clearly direct material cost is $200. Okay, so that one is settled. And then direct labor cost. How to calculate direct labor cost? Direct labor cost is $15 per hour according to the question times 10 hours. 10 hours that has been used for the job. So $15 times 10 hours equal to $150. Okay, that one is also settled. Now you have calculated the direct material cost and direct labor cost. The next thing to do is to calculate the overhead cost for this job. So when you want to calculate overhead cost for this job, remember you have to do two steps. First, you have to calculate the predetermined overhead rate. Okay. What is the formula for predetermined overhead rate? The formula is estimated or budgeted overhead cost divided by estimated or budgeted allocation base. So you can see there in the box, small box there, POHR equal to budgeted overhead $760,000 divided by the budgeted allocation base. In this question or scenario, the budgeted allocation base is 20,000 labor hours. So the POHR is equal to $38 per labor hour. So now you have settled that first step. The second step is you have to calculate the applied overhead or allocated overhead for the job. So you have the rate is $38, and then to calculate the applied overhead, the formula is POHR times the actual allocation base. So you see the calculation of manufacturing overhead in the small box there. Manufacturing overhead equal to $38, the POHR, times the actual allocation base for this job is 10 hours. So $38 times 10 hours equal to $380. Now, you can calculate the total cost for the job. $200 plus $150 plus $380 equal to total cost for the job $730. Okay, that is the most important part of this topic. You have to know how to calculate cost for a job. This is very important. Okay, now let's see, understand the flow of cost in a job order costing system and prepare appropriate journal entries to record costs. Okay, this is journal entries. Journal entries are related more to financial accounting. So I just show you the slides. I can say that this is just for your general knowledge only, because journal entries are related to financial accounting. You are now doing management accounting. So see here the job order costing, document flow summary, the job cost sheet. Okay, I will stop now. Do not forget to write your name and matric number in the comment section.